There are big cracks appearing in the rental market of our major capital cities. If you're a property investor, this is one of the biggest warnings for you for the year ahead. In Sydney and Melbourne, unit rents are now moving backwards. Migration levels are starting to come down. The government is putting a crackdown on the number of people coming, and that is putting more pressure on rental markets. If you're expecting a rent rise, forget about it. Rental prices are going to start coming down in our major capitals this year. The cost of living crisis that has defined Australian society over the past few years may be behind us now, and that's bad news for property investors, but good news for property renters all across the country. If you're interested in my thoughts about the rental crisis and why it's just about over and what it means for property investors, this video is for you. Okay, so let's begin with what is actually happening in the rental market. You can see this inflection point where rental inflation levels were up here and vacancy levels were coming down just about a year ago. Now, since then, it's been coming down, and in our major capitals, it's now below zero. Putting it in a different way, it means that rents are falling in units in particular across many capital cities at the moment. You can see this in this data here. The annual rent growth has collapsed from 8.1% in 2023 to 4.8% in 2024. Now, if you're a renter and you're hearing these numbers, you're like 8% and nearly 5%, and that's falling? These numbers are ridiculous. Imagine you're a renter and you got a freaking 14% increase in your rent over the last couple of years, and renters all across the country, they have had that and worse in major capitals all across Australia, particularly in Perth and Adelaide, where rents have just gone gangbusters and people are paying ridiculous amounts and huge increases, and it's driven that cost of living crisis that I had mentioned. But here's the good news. National rents only rose 0.4% in quarter 4 2024. There's a little bit of an anomaly there. Over the year, they rose nearly 5%. Over the quarter, the last quarter of 2024, they rose barely any at all nationally. So what does it tell you? This is the story that we put out a few months ago on one of our last sessions where we came to you and we said that rental markets were starting to nosedive. Now that start has continued, and it's no longer a story of, hey, is this happening? It has happened already. What happens next here will be one of the most defining features of the property market story in 2025 and 2026. This could go in a few different ways, everyone. We could have a situation where rents just come down and stagnate at the current level. Will that nosedive in the pace of rental inflation that we've seen? Will it just plateau off and we'll have rents stay the same? Now, that's probably the most likely outcome, but there is another situation that is worth unpacking here as well. We have a few sort of variables that suggest that it could go in this scenario too. What if rents begin falling and they don't stop falling for a little while now? Now, there's a few reasons why that we're going to unpack in this episode about why this may actually happen. Now, if this does happen, the key underlying message is rents are the income of a property investment. If the income of a property investment comes down, the value of that property investment, all else equal, also comes down. This is going to tap into the growth rates of property investors across the year and years ahead if the rental story changes. It drives the national growth story for house prices too. Rents come down, house price growth stories will come down too, all else equal, of course. So let's go through what is actually driving these changes in the rental market. So firstly, the vacancy rate, that is the number of homes that are available to rent that are not currently rented, is increasing pretty much everywhere. There's a 1.9% national vacancy rate, up from 1.4% a couple years ago. It's still very low, but it's trending upwards, which provides exactly what renters need. When they go and look for a home to rent, there's more of them available, which drives up the competition from those landlords to go and get a tenant. And that means, hey, I can actually find something to rent. Can you imagine how sucky it would be if you're like, hey, I need a home to rent, and then you go every single time and you see 50 people at every inspection and there's only one home for rent. As ridiculous as that sounds, it seems so mind-boggling when you walk around as well, but as ridiculous as that sounds, that has been the reality for many, many people, particularly at the lower end of the rental market where most people participate in. You know, if you're renting at below 5, 6, 7, 800 per week, that's the majority of Australians. That area, that demand has been so high and the supply has been so contained, and that has put a lot of pressure. But all across Australia, the vacancy rate is going up. There are more homes available. So that big increase has offered more opportunity, and it's reduced that pressure in rental prices because tenants have and landlords are in more balance, and landlords can't just jack up prices because the market is not demanding it at the moment. Tenants have more sway. The reasons for this, though, that's what's really, really interesting. One of the big reasons, and I keep harping on about this, particularly in our shorts and other content and LinkedIn content that we've done, investors are not the problem when it comes to rental accommodation. They are the biggest solution in Australia. It may not be the right solution, but in the short term, the people who provide rental accommodation are property investors. Yes, they might be taking away a home from a first home buyer, that is true, but they are providing a home for the rental market. And what we've seen over the last year or two is a huge increase in investors. The percentage of investors as a total share of the market is at a high level again after being in the doldrums for a number of years. What does that mean? There's more and more rental accommodation coming online. It's because those people that are selling to an investor, and that investor is adding one more listing on that for lease website, allowing renters to get another home to access and driving down rental appreciation with it. So the rise of investors, surprisingly, is the solution to our cost of living crisis, as absurd as that sounds. The short-term solution to the cost of living crisis is getting rents down, and that meant getting more investors in, and that has already happened. Investors have seen this increase in rents. They've all jumped in, chasing it, being like, I want the money, I want to make the money. And then what's happened is there's more rental homes, and as a result, renters' problem of actually trying to find a home to rent in has got a little bit better. Investors play a role in that solution. I know that is going to piss a lot of people off, but yeah, it's the truth. It's just how supply and demand works. You can either hate it, I'm just talking facts here, you can disagree, do whatever you want, I don't really care, to be honest. Next up, we have migration slowing. This is a huge, huge reason why the vacancy rate's going up and why rents are coming down, particularly in the unit sector. This is a little bit unusual because whenever you look at it, you just see population soaring, we don't have enough homes. Yes, that is true. Go back through our channels and you'll see a number of videos of us talking about that. That is true, but that was true. What is now happening looks like there's that clamp down on migration, and it's actually playing a role. Now, migration data comes in very slowly. We get it like 6-9 months after the fact, and then we see, hey, look, fewer people came. But what you see earlier is what is actually happening on the ground. You have rental vacancies in CBD areas increasing a lot. You have rental prices in these areas coming down. What that means is there is less demand for homes in these areas, for apartments in these areas. The people that demand these are typically new migrants. If you ever go to the CBD of Melbourne or Sydney and you look at who is competing for this stock, for this rental stock, it's typically someone who's new to the country. Versus if you go out, 10, 15 kilometers and look at a house, it's typically a Melbourneite or a Sydney-sider who's there being like moving in between homes. It's not the new entrants in the country that are like, hey, I want to, get an apartment in Randwick and be like, I want to live here. Most of the time they're like, hey, let's go straight into the CBD because that's where I want to be. That's why you're seeing a big, big drop-off. The expected drop-off in terms of numbers, we don't know the actual numbers here, but net overseas migration fell from about 550,000 in 2023 to down to 261,000 in 2025. It's expected drop-off, so we don't know how true that is at this point, but if that does happen, we're halving the number of people, and that is putting pressure off the rental market as well. One other reason, and this one is a bit hard to unpack, but affordability. Renters cannot continue to keep paying ridiculous increases on their rents. You can only go so far before people be like, I just can't afford this. And when you have more homes available to rent because there's fewer renters there chasing that same stock from the migration story I just touched on, that creates less pressure in the rental market. So that affordability story is a big part of it. But rents are up 36% since COVID, an extra $171 a week, or nearly $9,000 a year. That is ridiculous. Renters now spend 33% of their pre-tax income on rent. A third of your money is going to simply pay rent. It's pretty harsh. This is forcing younger Australians and those that don't have higher incomes into share housing. This is actually an odd solution. It's a bit of a horrible one, to be honest. I don't really know if I like this, but we're seeing the number of people inside an actual house go back up. And that is partly because we can't afford to live on our own, so we need to live with somebody else to split the cost there. Yes, it's a good solution for the housing problem, but I'm not so sure it's a good solution for society where young Australians can't actually get a home, so they have to live on top of each other and live with each other. Seems a little bit strange, seems a little bit warped for Australia to view that as a good outcome, but it's what is happening to actually survive out there at the moment, and the data is showing it pretty clearly. Now, let's go through this distributionally a little bit, because this is really important for property investors, and it's something that everyone needs to pay attention to. The story of Perth, of Brisbane, of Adelaide, of these areas having rampant rental inflation and rampant property price growth, that is a 2023 and 2024 story. You're hearing it here early, and the other channels will not tell you this because they rely on you to buy in these areas to keep the wheels in motion. These areas, their growth stories, it's changing dramatically. We are at the top end of these cycles. These cycles are going to reverse out, and some of the other cities are going to start doing really well. Cities that I can see doing particularly well are Melbourne, Darwin, and perhaps even Sydney to a degree after a little period of time. It's because the property cycle is just washing out and the affordability metrics look a little bit different. The biggest rent increases in Q4 2024, Hobart, 1.5%. I was just there actually, and I actually think Hobart is a city to watch very closely. It should be on your data metrics again. It has had its poor run. It has had that poor cycle for a period of time, but if this rent increase continues in Hobart, it is showing you something. It is showing you that there's an undersupply of homes there at the moment. Perhaps the economy is doing well again, and perhaps it's time to start looking at Hobart again. It has a stronger yield than all the other capital cities. It is also an absolutely beautiful place to be and has a lot of fundamentals working for it too. So it might be too early to talk about it, but it is one to put on the radar of, hey, I need to be watching what is going on in Hobart. There's absolutely no rush to invest there at the moment, but it is one to watch. If it posts these numbers again next quarter and the quarter after that, then I think you'll start seeing everyone start flocking into it because the data metrics suggest it's starting to be on the upward trajectory again after a long period of being on the downward trajectory. It's again that housing cycle story. Perth has also had a sizable increase in rents, and Adelaide too, but much of that story is starting to slow down when you look at it month to month. At an annual level, Perth, Adelaide, and Hobart all had pretty strong rises too. So quite a little bit of information there about different cities. And what you're actually seeing is apartments. That is driving the weakness at the moment in rental prices, much to do with the migration story. Houses, still really strong demand, and there is an undersupply of houses in many of these capitals, and that appears in the rental market. So summarizing this all, if you're a renter, you have fewer rental appreciation letters hitting your mailbox or your emails this year. If you are a property investor, you need to be mindful of this and keep tracking it because it is going to be one of the main stories of 2025 and beyond. And if you're an investor who's simply looking to buy at some point in the future, or you're a homeowner, this is going to be one of the big stories of 2025, and we'll keep talking about it on this channel so you get live updates as you go. And if you could do me a favor for all of this, just hit that subscribe button below and keep following me on my journey to produce insightful property content for you all.